Jeff Bates is my name. Dole Whip Dad is my regular channel. This is the Animated Investor. These are my why. Why do I want money? I want to make more of a difference. I want to give more to the things and the people I love. I want to do more of the things that make me happy. And you know what? Money helps me do that. YouTube helps me do that. And this is what I'm going to do to make more on YouTube and to create more opportunities for me and my family. If that interests you, stick around. Let's have some fun. All right, in today's video, we're talking about my initial positions. My initial positions as it relates to this channel. I've only been trading since on Webull since I think the very end of February. Check my Disney stock initial position video for the exact date if you care. I don't know why anybody would. But I got fairly aggressive with Michaels about a month later. So I have a good friend and somebody I work with who works at Michaels. He runs a local Michaels. And so I have some insight just in that I'm in the store a lot. And Michaels is in trouble. Michaels is in trouble because brick and mortar's in trouble. Brick and mortar's in trouble because Amazon is crushing everybody. And then COVID happens, Corona, pandemic, whatever. And that's kind of bringing about quicker the end of brick and mortar. I and everyone else on the planet foresees a time where there's going to be very little, if any, brick and mortar shopping. But it's not here yet. Obviously, this crushes brick and mortar, but they'll come back unless they go bankrupt. Michaels and Hobby Lobby and others like that. I run a nonprofit after-school program in my career, and I've bought in my career thousands and thousands and thousands of dollars worth of arts and crafts supplies for kids mostly. Not going to say I've never shopped at Michaels, but Hobby Lobby and Michaels have very, very high overheads, which makes them very, very profitable if they can get people in the store. Less so if people go on Amazon. There is a whole generation of people that are not ready to move to buying all this stuff on Amazon. Do you know why I know it? Because they haven't already. There's a whole generation of people who want to buy this stuff, but they want to touch it first. They want to talk to a clerk about it. They want to see it. They want to look at it. It's a very personal thing. People who are crafty, creating crafts, whether they're artistic or they're making stuff to sell or whatever they're doing, it's their art. They want to see it first. They don't want to buy it yet. They're not ready yet to buy it online. I think that's changing with the generational shifts. But right now, I don't think the Hobby Lobbies and the Michaels of the world are going to go away. Now, Michaels is a very volatile stock. I don't recommend Michaels long-term in general, and I probably won't recommend very many brick and mortar in general, but this is a play for them not to die. This is a play for them not to go bankrupt, because if they go bankrupt, the stock is going up. So let's talk about my positions, okay? So I started in March 24th buying, and I bought my first 10 shares at $1.78. $1.78. I think the 52-week high on Michaels, or low, excuse me, is $1. I think the high is 13. Pretty sure about that. So it's a very volatile stock, especially for the size of the store nationally. It's not that big. The reason I really decided to go for this is the management too. They've had 3 CEOs in the last 18 months, I think, nationally. So come on, board of directors. I don't know. I don't know anything about it, but that's a lot. But they seem to be very aggressive. They planned in Q3 and Q4, quarter 3 and quarter 4, to expand, to have more brick and mortar stores. So that tells me they were very confident pre this, if not prudent. I don't think I would be expanding brick and mortar stores, but I wouldn't be in that business. But my point is they thought, they foresaw a position where they could expand. I think that's part of the problem in general with this stock. That's why it's so volatile. But back to my position on 3/24, I bought 10 shares at $1.78, and I actually bought one more at $1.84. I think I had another like $2 in my account, so I probably just used it. 2 days later, I thought I got to buy more. At $2.28, I bought 11 more. And then that same day, I bought 8 more at $2.80, and the same day I bought 3 more at $2.70, and so on and so forth. I have currently a position of 52 shares. The 52-week low is $1. The 52-week high is $13.08. That's pretty crazy. I think that what that means to me is this is a play to, I think my average share is $2.20. So as this goes higher, I can do well. 50 shares at $2, that's easy math. You got about $100 worth of stock, right? So if it goes to $1, I lose $50. If it goes to 0, I lose all $100. I think it's going to go to $3 fairly easily. I make 50 bucks on it. I get out. I'm a brand new trader. This is me trading from the beginning. We're going to watch from zero to maybe $1 million. But this is the kind of trade that I like to play. Now, I'm new. I don't recommend this necessarily, but I guess I really do, because for entertainment purposes only, there's not a lot to lose here. Do I think it's going to go to $13 again, the 52-week high? No, I don't. Do I think that every stock is about to bounce? I do. The market was poised, what was it, 28 was poised to go to 30,000 on the Dow. At least that was what we were talking about. And then this hit and it dropped all the way to 18 and now it's at 24. Think about that. It dropped to 18 and now it's 24. That's a 25% increase. I didn't buy everything at the bottom, but there's room to grow there. We'll be at 28, I believe, before the election. The election's in November. If Michaels just follows the Dow up another 20%, that's the easy money, right? $20 bill's a $20 bill. I think I'll probably sell it at between 3 and 4. I think the target for this is probably 450. And if I let it get to 4, it's pretty much double my investment. So I do want to talk a little bit more about it. I don't want to nerd out on you guys too much, but there's a lot of news and it's not overly positive. This is from Yahoo Finance, Zacks. Michaels has lost 93% of its value in the past 5 years as the company appears to overextend itself. The business has been making poor investment decisions with its continued investment in new store openings. Management seems to be paying very little attention to the shifting consumer. The firm had a declining top line and a bottom line that past 2 years, and analysts are expecting this to continue through 2020. All of this, and the management was planning to expand to more brick and mortar sites in Q3 or Q4 or both. The takeaway, again from this article at least, I just found it on Yahoo Finance, the longer market stores stay closed, the closer to bankruptcy this company becomes. I would recommend that you stay away from these infected shares with a negative book value and equity and decline top and bottom lines. I see no value in these shares at any price. Management is clearly not making the right investment decisions, and I would not trust any of my money in this business. Long term, I think all brick and mortar are going to go away. Short term, at $2, this is a play for them not to go out of business. I think that goes to $3 or $4 quite easily. I could sell it at $2.50 and make a little money. I'm not going to get rich on this play, but it's $100 and I'm going to turn into $120. It's $100 and I'm going to turn into $140. Or I take a loss. I just really think it's a very, very likely play to get me 20, 30, 40% over a couple weeks. That's why I'm in Michaels. All right, everybody, I want you to do 3 things, all right? At least 2 out of the 3 things. Well, at least 1 of the 3 things. Smash the like button. Smash the like button. The channel's new. I need you to smash the like button. The algorithms on YouTube need you to do it, so it puts it out, so if you didn't hate this, okay? Also, subscribe. If you want to start investing, you can do it yourself. I am not a pro. You don't need to be either. This is for entertainment purposes only. And you know what's entertaining? Making money so I can buy more DVC points and take my family to Disney with me. On Webull, if you sign up with my link, they love me and they give me stuff, and they love you and they give you stuff. The promotions change all the time. I currently have about 5 free, I didn't pay anything, shares of stock of Comcast. They're about worth $18 each. That's almost $100 of nothing free money that they've given me. And others have free money that they've given them. You sign up, and I think they give you 2 and they give me 2. I think if you sign up, I get 1, and if you deposit $100, I get another, and I think it's the same for you, but it changes all the time, and who knows when you're watching this. Use Webull. It's awesome. Now, I also use Robinhood. Robinhood is also awesome. I signed up with Robinhood. They gave me 1 free stock. It's worth about $4. It's an oil stock, and I'm holding it because I think it'll go up, and we'll talk about that in another video. Robinhood, use my link. You get a free stock. I get a free stock. Webull, you get free stocks, and I get free stocks. I prefer Webull. I don't hate either. I love Webull. Do whatever you want. Sign up, use my link. We both win. All of this is for entertainment purposes only. I am not a financial investment advisor. I'm not a broker. I'm not a dealer. These are my personal experiences and opinions. Don't use my opinion for your strategies. Just do the research. There is risk involved. My results are not typical. Go get pro advice. Also, I have affiliate links. Some of the links pay me if you use them, and it costs you nothing extra.